Hi, in chapter 2 and chapter 4, we understood the concept of double entry bookkeeping and how each transaction gives rise to two separate entries. One would be debit and the other would be credit. So now we do understand how to record those transactions. But when we do record those transactions, what is the next step in it? So basically, the process of recording those transactions is the basic step of bookkeeping. However, to make use of the information that the business has recorded, it needs to understand and kind of like interpret the information. So, for that purpose, a business wants to find out what balance it has for each account at a period end, which could either be at a week end, month end, maybe maybe quarterly, or on an annual basis. So all the separate accounts in which we recorded transactions such as cash, capital, creditors, debtors, sales, revenue, and expenses at a certain period end which the business decides and which be different for each and every business, the accounts will have to be totaled and aggregated, and then a final balance needs to be there for the business to can then move on with calculating the final balances of expenses, revenue, profit and loss, assets and capital. So here we will understand how to close accounts when appropriate, balance of accounts at the end of a period and bring down the opening balance to the next period, distinguish between a debit balance and a credit balance, and lastly, describe and prepare accounts in three-column formats. So accounts for so first we know that there are some accounts which have primarily a debit balance, and then there are some accounts which would primarily have a credit balance. So accounts which have a debit balances are generally assets and expenses. In this example, we would take an account of a debtor, and then uh, we would do transactions in those accounts, multiple transactions, and then towards the end of the period, we will try to close it off or see whether there is a balance remaining. So, in terms of debtors, if a debtor has made uh, have if we have sold goods to a debtor, and if the debtor has paid us that amount towards the within that period, then towards the end of the period the debtor will have zero balance because all the amount that they were owing to us has been paid. However, that is generally not the case. Generally, debtors would have amount outstanding in a period which would have to be then taken forward to the next period. We would work through this in an example. So, for example, K Tandy is a customer and we made a few sales to them. So, here in this example, on 1st August, K Tandy bought goods for us on credit for 144. Then again on August 19, it purchased goods for 300. Now, that if that was the thing, in total, K Tandy purchased goods worth of 444 from us for the month of August. Now, K10D in the same month made two bank payments to us. Either it would be a check or a bank transfer. So on August 22, it paid us an amount of 144 corresponding to the first sale, and then on 28th August it paid us the remaining balance, which was 300. So if we total both the debit balances and the credit balances, the total is going to be the same, which is it bought goods worth 444 and it repaid the same amount 444 towards the end. So both of the debit and the credit sides balance. This means the account balances off, and that there is no balance of K10D pertaining remaining at the period end, which has to be taken forward to the next period. So in this case, therefore, we can close off our account on 31st August 2006. This is done by inserting the totals on each of the side. So when we have to insert the totals on each of the sides, and both of when both of the sides are equal, this means the account is closed off. We don't need to take it to the next period. If Kate&D plans to purchase his goods from us in the month of September, we'll have a new account open up then for Kate&D, because there is because she has for the month of August completely settled her account. Now, however, if we look at another customer, C. Lee, and from the account here, we can see that C. Lee made three sales in the month of August for 177, 203, and 100. So the total of the sales is 480. On August 30, there was a bank payment made of 480, which pertains to all these three transactions. So one payment was made by Sealy to settle all of these three sales. Again, when we try to balance the accounts, both of the account balances are the same. This means that the account is closed off. Sealy has settled all the amount that she owed, and hence, uh, Sealy owed, and hence nothing has to be carried or forward to the next period. Hence, the account here is closed off. So, basically, in terms of when we are closing off the accounts, we need to ensure that both sides, the total of the debits and the total of the credits, they both balance together. This closes off the account completely. However, if this does not close, then we have to do something called, which we would look in the next section. So here, if we look at where the debtors still owe us for goods, so D Knight here, if we look at the account, has three sales, purchased goods from us on three separate occasions: 158, 206, and 118. By the end of the month, on 28th of August, D Knight had only made a payment pertaining to the first sale, which was 158. If we were to total all the debits and all the credits, just based on a rough analysis, we can see that the last two transactions of 206 and 118, they are still pending, which means the D Knight is still owing us that amount. And if we were to put a total at the bottom for both of them, this would be more than this. This means that the account does not balances, which in result means that D Knight still has some amount owing to us which needs to be settled to completely close off the account. This means that we cannot close off the account, so we have to balance it by inserting a balance which would then sort of close the account for the period but carry forward a balance for the next period. So the step of doing is to add up both sides to find out their totals. Now note here, so we would add up this column and we would add separately. We would add all of this. Here we just have one figure, so we'll leave that as one. If we had two or three figures, we will add up all of them. Now note, we will not write anything in the account at this stage because both the balances are not the same. What we have to do now is deduct the smaller total from the larger. So here we will deduct 158 from the total of the debits. We will deduct that amount. So whatever the balance is remaining, we will add it to the side which falls short. So we can see that this one has a smaller balance. So the difference between this, we would subtract it from 158, and the difference that we have remaining, we will add here. The result of adding the difference here would be that both the debit side and the credit side would add. So now if we were to add the debit side, 158, 206, and 118, the total would be 482. We would subtract 158 from 482, whatever the balance is, we would insert it here. The balance is 324. So when we insert the balance here, the effect would be that both the debits and the credits would add up together. So then we would sum up the balances of both the columns. So we'll write 482 here at the bottom, and then we'll write 482 here at the bottom as well. Now, because there is a balance remaining, over here we will write balance carried down, which means it has been carried down from this year, from this period to the next period. So, whatever balance we have, it is very crucial that we